Hey everyone, welcome to The Explainer. Now, if you work anywhere in accounting, finance, or advisory, you already know the U.S. tax code is, well, it's a bit of a fascinating beast. And taming it, that is absolutely critical to your career. So today, we're kicking off our Foundational Explainer series on the U.S. tax system, specifically designed for accountants. And we're starting right at the very beginning.
Here's our roadmap for today. We've got three main stops. First, we'll cover exactly why U.S. tax matters to every single accountant. Second, we'll look at the required learning based on your specific role. And third, we're going to unpack the mechanics of the three-level U.S. tax system.
Okay, let's dive right into Section 1, Why U.S. Tax Matters.
You know, there's this really common myth out there that tax is just the tax department's problem. Like, they're just working in some silo down the hall, right? But let me be incredibly clear here. U.S. tax literally touches every single financial statement and every major business decision. Having foundational tax knowledge is a completely non-negotiable skill across all disciplines. Let's actually walk through how it impacts four key areas. First up, financial review. Say you're reviewing a balance sheet. You are going to see ASC 740 deferred taxes. You just cannot effectively audit or review those financials if you don't understand the underlying gap between book income and tax income. Second is transaction advisory. M&A deal value is heavily dictated by tax consequences, like what entity type is being acquired. Is there a step up in basis? What exactly happens to those tax attribute carryovers? If you don't grasp these implications, your deal valuation is going to be fundamentally flawed. Third, financial modeling. You're building out a complex model, projecting future cash flows, right? But remember, those are after-tax cash flows. If your effective tax rate assumption is off, your entire model is distorted. And finally, client communication. Your client looks at their reported net income and asks, hey, where's the cash? Well, often, tax is the exact reason why their cash flow diverges from that net income. If you can't explain that to them, you're missing a massive piece of the puzzle.
Let's frame this with a totally realistic scenario. The statutory federal corporate tax rate in the U.S. is currently a flat 21%. But say you're reviewing a client's financials and their effective tax rate is sitting at 28%. Why? Or maybe you're looking at their balance sheet and there's a massive $4 million deferred tax liability staring back at you. Now, if a senior accountant is sitting in a room and cannot explain to the client why their effective rate is 28% instead of 21, or what that $4 million liability actually represents, well, they just aren't equipped to lead those client discussions. Foundational tax knowledge is exactly what separates someone who just runs the numbers from a truly trusted business advisor.
All right, moving on to Section 2, Required Learning by Role.
So this is your roadmap through the firm's Tax Handbook series. It breaks down exactly which modules you need to master based on your current role. If you're a junior or a new hire, your base language starts with modules 1, 2, and 4 in your very first month. As you move up to senior, your minimum expands through module 5. You'll complete the Foundation series. And this is exactly where you need to begin module 6 on corporate tax and module 7 on pass-through entities. You're taking on more complex client questions at this level, so your knowledge base really has to expand to match. Now, when you hit manager, you're looking at modules 1 through 10. You need to complete the advanced series and really start specializing in the special topics that are most relevant to your specific practice area. And finally, for the directors out there, you own the whole shebang. The full series, modules 1 through 14. You've got to master all of it, lead the training for your teams, and use those special topics handbooks as your core references. This is all about ensuring everyone is speaking the exact same language at the right level of complexity.
Which brings us to Section 3, the three-level system.
The United States operates what we call a multi-layered tax system. We are talking about overlapping and honestly sometimes conflicting tax obligations at three distinct levels. If you're dealing with most other countries, you know you're usually interacting with just a single, centralized national tax authority. The U.S. is completely different. Its structure is highly fragmented. Now, does this create a massive burden of compliance complexity? Absolutely, yes. But, and this is super important for us as accountants, it also creates incredible tax planning opportunities for our clients as long as we know how to navigate it.
Let's virtually stack these three layers so you can really see how this all builds. Layer 1 is federal. The authority here is the U.S. Congress and the IRS. They govern income tax, payroll taxes like FICA and FUTA, estate and gift taxes, and excise taxes. The beauty of this federal level is that it applies uniformly across all 50 states via the Internal Revenue Code, or IRC. But then we stack Layer 2 right on top of that, state. The authorities here are the individual state legislatures and state revenue departments. They impose their own income taxes, sales and use taxes, state payroll taxes like SUTA, franchise taxes, and property taxes. Now, contrast this with the federal level. State taxes vary dramatically. For instance, there is literally no federal sales tax in the U.S. Sales tax is entirely a state and local concept. On a flip side, 9 states have absolutely no state income tax. It's a total patchwork quilt. Finally, we stack on Layer 3, local. This involves city, county, and district authorities. This is primarily where property taxes live, but it also includes local income taxes, occupancy taxes, and business licenses. Just as an example, cities like New York City and Philadelphia, they impose their own local income taxes right on top of the state and federal taxes.
Let's actually bring this 3-level system to life with a specific scenario, a business operating in California as a C corporation. First off, they paid a federal income tax at a flat 21%. That's Layer 1. Then, Layer 2 hits, California state income tax at 8.84%. But wait, California isn't done. They also impose a state franchise tax with an $800 minimum, essentially just for the privilege of doing business there. And then we get to Layer 3, local. Depending on exactly where they operate, let's say San Francisco, they face potential additional city taxes, gross receipts taxes, and local business licenses. When you see it visually stacked up like this, you immediately understand the compliance burden your clients are facing. Understanding all of these overlapping layers isn't just trivia. It is absolutely essential for providing effective, accurate advice to your clients.
And that brings us to the end of our first foundational module. We've explored exactly why tax matters to every single accountant, walked through your specific learning path, and unpacked the 3 overlapping layers of the U.S. tax system. But looking at all those layers, federal, state, and local, leaves us with a very important question. Do you know the 7 specific types of taxes that actually make up those layers? I mean, we've got income, payroll, sales, property, but what are the others and how do they actually function? Well, that is exactly what we'll be covering in our next explainer. Thank you so much for joining me today. Focus on these fundamentals, and I will see you in the next section.